Hello, this is James Graff with Advisors Mortgage Group with another Mortgage Minute. This one's going to take more than a minute. This is the market wrap for July 28th, 2020. Tuesday, stocks have ended the day lower. The Dow closed down 205.49 at 26,379.28, and the S&P 500 closed down 20.97 at 3,218.44. Mortgage bonds ended the day near their highs, up 28 basis points. Helping mortgage bonds, as mentioned this morning, was the Fed coming in and buying $6.3 billion in mortgage bonds. Economic data, the Case-Shiller Home Price Index, which is considered the gold standard for appreciation, showed that nationally there was a 4.5% annual gain in May, which was down from 4.6% in April. The 20-city index decreased from 3.9% in April to 3.7%, but these are still very strong appreciation figures, especially with all the adversity the housing market has faced. Part of the reason for the strong gains is a lack of supply. The latest existing home sales reported showed inventory down 18%. Regionally, the price gains in Phoenix, Seattle, and Tampa continued to be the strongest in the nation. Phoenix posted a 9% year-over-year price increase, followed by Seattle with a 6.8% increase, and Tampa with a 6% increase. Price gains were the smallest in Chicago, New York, and San Francisco. Upcoming events. Tomorrow morning, the MBA will release mortgage application data from last week, and pending home sales will be released. Pending home sales will be an important report as it will show how many signed contracts on existing homes there were in June. The market is expected a 15% gain, which speaks well for future existing sales. There will also be a Fed statement at 2 p.m. Eastern Time. We know the Fed will not be changing rates anytime soon, but their comments on the economy, inflation, and purchases will be important. For a technical picture, mortgage bonds had a strong day, moving much higher in their wider range. They are now only 8 basis points away from the formidable 103.219 ceiling. This lever has to be watched closely, as the last few times it was tested, mortgage bonds were pushed much lower. We can continue carefully floating into tomorrow, but should we see things turn once resistance is hit, expect to lock in rates, basically, floating currently. But thank you for spending your time with me. That's James Graff with Advisors Mortgage Group with another Mortgage Minute, although it took more than a minute, didn't it? Thanks again.